Hey guys, welcome back to the channel. Today I'll be showing you guys the results on a cash cover put strategy backtested over several months. So what I did on this backtest is I built a function to get all the available tickers in my database, and I tested those stocks with the price range of 10 to 30. So in this line I'm just getting all the tickers that meet this criteria as of December 10th, 2021. After I get the tickers, I apply the strategy, which I went over last week. So that gave me about 1,400 different tickers. I then R-bind the results, and then I added another column for the efficiency ratio, which is just the net premium divided by the gross premium, and that just lets me know how much of the gross premium we actually get to keep, and that's returned as a percentage. So then after I added that as a column, I saved my workspace. So let's go ahead and load that up into the environment. I'm also going to provide this script and this data file, and I'll post a link down in the description area where you can find these. But if we take a look at RES for the results, so this backtest included approximately 1,400 different tickers, and each row represents the results for each of these tickers. In order for me to narrow down this list, I'm just going to focus on a couple of different columns. For starters, I'll be focusing on the net premium and N is just the number of periods in this backtest. So for the majority of these will be 8, and that just means I have successfully backtested for the last 8 months, and I'll be dropping those with less than 8, since that just means that the backtest may have been incomplete or I'm missing a few months. Now, since this backtest is 8 months, I want at least $1 each month in premium, so I'm going to be subsetting those with a net premium greater than or equal to 8. So if we go to our script, and if we scroll down to the next line, here I'm going to subset all those that match 8. So I'm going to go ahead and run that. Now in this next line, I'm just going to subset again for all of those tickers that have a Sharpe ratio greater than or equal to 1. Now in this next line, I'll be subsetting all those tickers that have a net premium greater than or equal to 8, representing approximately $1 a month in net premium. So if we take a look at CCP, so here we see a total of 8 entries, and I do see that N is 8, and our net premium is greater than or equal to 8, which is what we wanted. Our average stock price was between 10 and 30, and if we scroll to the right, our Sharpe ratios are greater than or equal to 1. And lastly, what I'll be doing is subsetting by this very last column for efficiency. So I want the efficiency greater than or equal to 70%, which is just the net premium divided by the gross premium, which gives me a rough estimate of how much of the gross premium we actually get to keep. So if we run that very last line, and if we take a look at CCP again, we're left with 2 tickers. So depending on your trading style, ideally the market points should be greater than or equal to 0. That just means that on average, the price for these tickers is rising rather than falling. And if that's the case, then our puts become worthless since they will be left out of the money. Our gross premiums are in between 11 and 12. Our net premiums are between 8 and 9. And these are just overall for the 8 months. The average stock price and the average return on this strategy versus the stock. So we see that on average it's about the same for this first ticker, and it's a little bit higher for the second one. The total return for this strategy versus the buy and hold return. So both are a little bit higher than the buy and hold return, which is what we want to see. So the number of months is 8. The number of losing trades was 3 for this first ticker, 1 for the second. Here we have 5 gaining months for this first ticker, but the net gains is 8. And to clarify, both of these columns are gross. So if the stock falls and doesn't fall past its break even, then we will consider that a net gain. So for this first ticker, 8 of these months were net gains, which brings our percentage win to 100%. And 7 out of the 8 months were net gains for the second ticker, making our percentage win approximately 88%. The Sharpe ratio for the strategy versus the Sharpe ratio for the stock. And lastly, the efficiency ratio is between 0.7 and 0.8. So if we go back to our script, here I built a function to get the premiums for the very next trading month, but currently we are still in December and the next expiration will be December 17th. So let's just see how much of a premium we get with 1 week left to expiration. So I'll go ahead and run this function, and all we really need to enter is the symbol or the underlying symbol, the expiration, and the trading day, and this will pull directly from my database. So I'll do that for both of these tickers in my CCP data frame. So if we go ahead and run this line, These prices are good as of December 10th. So I'll go ahead and bind the results. And I only want to keep the first two since it does require some margin to place these orders. So line 207 is just out of preference, depending on how many tickers you want to trade. So if we take a look at next expiration, go ahead and close these out. All right, so as of Friday, December 10th, we have the pricing for these two different tickers, both for December 17th expiration. So this is roughly where the stock closed on Friday, December 10th. The strike prices for each of these tickers, the midpoint quote. So for this first ticker, if we were to sell at this strike and this option ends in the money, we would have to buy up the stock at the strike. But since it's trading slightly below, we lose approximately 15 cents currently. But since we received 82 cents for each contract, we are left with 67 cents. And this is just an approximation since we don't know where the price will be next Friday or at expiration. But as of now, if you divide the net premium by the strike, then that gives us approximately 2 to 3% in return. But your break even will be the strike minus the premium collected. But as long as the stock stays above this break even, we should be able to capture some profit. Now the last step is to send the orders. So I'll be using this data frame since it has all of the information I need for each of these tickers. So let's close this out. All right, so there's two alternatives. The first one is if you want to use Interactive Brokers, and the second is if you want to use Robinhood. If you want to use Robinhood, then at the very top, you shall place your username and password in these areas here. So let's go over these functions. So if you're using Interactive Brokers, all we need to pass in is this next expiry data frame and the limit on how many tickers you want to trade. So if you open this up, and here we have two cases. So if you want to just place one order, it will do the first block. If you want to place two orders, it will go to the second block. So let's open up the first block. All we're doing is connecting to Interactive Brokers using this port number. And here I'm just assigning the symbol, the expiration, the strike, and the limit price. I'm going to create a TWS contract by passing in the underlying symbol, the currency, security type, which is option. The expiration must be in this format. The right will be the put, the strike, and the primary exchange. I'm going to require contract details, and the very first item on the list will be our contract. I'm going to require an order ID, and here I have a TWS order. I'll go ahead and pass in the order ID. The order type will be limit. The limit price will be set or assigned. We want to sell the option, and we only want to sell one contract. We don't want to transmit this to the live market. And then finally, just place the order by passing in my connection, my option contract, and my order. After the order is placed, I'm going to go ahead and disconnect from Interactive Brokers. And if you want to place an order for two different tickers, it's relatively the same. All that really changes is this block here. So here you'll notice that we have ones, and that's just for the first row. After we get the contracts and place the order, I'm going to set the system to sleep for 5 seconds, and then we're going to repeat the process. Only this time, I'll go ahead and assign row number 2, and the rest is just the same. So if you go ahead and minimize this, I'm going to go ahead and run this function. So I'll go ahead and send orders to Interactive Brokers, but first I'll put a system sleep for 2 seconds just so that we can see it. And if we go ahead and run it, so here our orders are popping up. Alright, so we have two orders on Interactive Brokers. Both are sells for the limit prices. Both are puts for the December 17th, 2021 expiration. Here we have our strikes. So these won't get actually sent to the live market, and that's just because this transmit is set to false. You can change it in the script or just click these buttons and you should get a pop-up. I'm just going to hit use this order. So since this is a demo account, it's just saying my order has been filled, but the market is not actually open right now. So I'll click transmit again, and then I'll click use on this order. So if we go to file, global configuration, and then go to API, first click on settings. So these are the items I have checked, and the socket port is 7497. If yours is different, just make sure the one in your script matches this port number here. Otherwise you can change it here or in your script. And if we click on precautions, I have all of them except the last one checked, and then just click apply and OK down at the bottom. So now for Robinhood and Robinhood orders, I'll go ahead and explain that briefly. So if we open up this function, the cases are similar to the one in Interactive Brokers, depending on the number of orders you want to send. So if we open up the first case, all we're doing is assigning again the symbol, the expiration, the strike, and the limit price. We must first establish a connection with Robinhood, so that's what this line is doing. The next thing we need is to require contract details. So I'll go ahead and pass in my Robinhood connection, the underlying symbol, the type will be put, and if you want details, I set this equal to true. So let's go ahead and run this for this very first row in our next expiry data frame. And if we take a look at ops, so we have 92 cases. So now we need to narrow down to the expiration and the strike we need. And that's done in this very next line. So if we run this and then check our ops data frame again. So now we have the expiration, which is December 17th. This is a put, the strike price. And we have several other columns with pricing and Greeks. But the thing I want to extract from this data frame will be this very last column, which is the option ID. And we need this to place the order. So in our script, I am going to use the place order options wrapper by passing in our Robinhood connection, the option ID, which we get from this ops data frame. The direction will be credit. I am selling this option. The quantity, I'm just setting this equal to 1. The type will be limit, and the stop price or the limit price will be rounded to the nearest 5 cents. And the time in force will be good to cancel. So let's try and place an order. And if we take a look at ID1, here you will see a message. So I actually don't have enough buying power to place this order. But just be careful on sending these orders to Robinhood during normal trading hours, as these might actually get executed. So after we send the orders, I'm just going to log out from Robinhood. And the next block is just in case you want to send more than one order, which is just a repeat of this first block. So all that really changes is this block here with the row number. So after we place the order and log out, we send the second option order, and this block is the only block that changes to reflect what row we want to execute orders for. Well guys, this concludes the video. I hope this was useful. I'll go ahead and place a link down in the description area where you can get the script and the data file. Please subscribe to the channel if you haven't done so already. Thank you so much for watching, and I'll see you guys in the next video.